Hello and welcome to IB Times TV. Today is Tuesday, September 6th, and I'm Eli Cabañas with your opening gold and silver market report. The price of gold rose this morning in Asia, Europe, and in the U.S. as investors lost faith in the ability of European leaders to contain, let alone actually fix, their ever-growing sovereign debt crisis. In the last 20 months, that crisis has spread from Greece to Portugal to Ireland to Spain and now to Italy. But even more troubling to investors is the fact that so many of Europe's banks are holding the debt of these weak European nations. Gold was also rising today as investors lost faith in the ability of the U.S. economy to grow enough to create jobs. On Friday, the U.S. Department of Labor said no new jobs were created last month, a development as shocking as it was surprising. These kinds of concerns hammered stocks and lifted gold briefly to a record $1,923.70 per ounce before it gave up some of those gains and moved to about $1,895. One of the main reasons for the retreat in the price of gold was today's decision by the Swiss National Bank, which is the Swiss equivalent of the U.S. Federal Reserve, to peg the value of its currency, the franc, to the euro. It is the latest in a series of moves by Swiss monetary authorities to put a lid on the increasing value of their currency. The franc has been rising because investors see it as a safe haven, much as they see gold. Silver moved in the opposite direction from gold. December silver fell 86 cents to $42.21 an ounce. Silver for immediate delivery declined 52 cents to $42.04 an ounce. On the stock market, the broad-based S&P 500 index fell 2.47% to 1,144.95, and the Nasdaq Composite off 1.92% to 2,126.10. The price of crude oil in the U.S. fell $2.13 or 2.48% to $84.44, and the euro fell against the dollar to 1.4061. Thank you for joining us. My name is Eli Cabañas, IB Times TV.
Welcome, everybody. This is Peter Schiff here on the Peter Schiff Show on Tuesday after the three-day Labor Day holiday. Although while the U.S. markets were closed to celebrate Labor Day, and of course what a fitting day to celebrate, way to celebrate the American labor movement movement by not working, which is what the labor unions have promoted. But when we were taking a day off, the European markets were open and getting clobbered, and that has resulted in a much weaker opening here in the U.S. You know, U.S. Stock market futures were down quite a bit on Monday. They didn't recover any ground this morning. The Dow Jones right now down 220 points, just at about 1,100 even, although that is about the high we've been this morning. We were down lower. We were down at 10,950 or so just about a half hour ago or so. That was about the low. And if you look at the Dow Jones, if you look at a monthly chart, the pattern is one of a rising wedge, which is a very bearish technical pattern where after making a big drop, you rise in value with a series of higher lows and higher highs, and you form kind of an upward sloping wedge. Generally, that pattern is bearish, and when it ultimately breaks, it's a continuation of the previous trend, which in this case is down, and it would at least project to a retesting of the lows from August 9th, which is around Dow 10,600. I tend to think that those lows will not hold and we'll get a lower low. I don't expect the market to fall apart. I've kind of had a target of around 10,000 on the Dow. I just think that there's going to be too much inflation, too much manipulation of currencies and attempts by governments to artificially prop up stock market for the nominal decline to be that much more dramatic. That doesn't mean that it can't happen. Certainly, we can see a more dramatic decline beyond the 10,000 level. I just think that if you're trying to handicap it like an odds maker, that the odds are that it won't be as dramatic as 2008, at least in nominal terms. In gold terms, it could be every bit as dramatic, in fact, far more dramatic as the stock market continues to make new lows. In fact, let me take a quick calculator. with the 11,000 Dow, and gold right now at a new all-time record high. Let me do this calculation. What is gold at? We are below 6 ounces. We're near or close to a new record low in the gold price of Dow, if not all-time record low, but a record low for but a low for this bear market, which began in 2000, where the Dow was worth 43 ounces of gold. So when you put the bear market, when you define it in terms of gold, you can see a much bigger decline than when you simply measure it in terms of depreciating U.S. dollars, which brings me, I think, to the real action in the markets today is in the currency markets. The big news is with the Swiss franc, and it's particularly timely for those of you who don't get my newsletter that I put out through my precious metals company, Euro Pacific Precious Metals. You should go and subscribe to it. It is free. And last week, the lead article in the letter was the one that I wrote, and it was called The Last Safe Haven Standing, in which I explained why gold was going to benefit from its competitors in the safe haven arena, meaning the Japanese yen and the Swiss franc. Their government's trying to undermine the appeal of their currencies, and that is exactly what happened last night with the Swiss franc. The Swiss basically announced that for all practical purposes, they're joining the Eurozone. When the Eurozone, the euro currency, was first put together, Switzerland, rightly, opted out of the process. They did not want to give up the sovereignty. They did not want to surrender the Swiss franc and adopt the euro, so they wisely stayed out of it. Now, because the euro is falling apart, which is precisely why the Swiss decided that they didn't want to play, now they decided to jump off the same bridge as their European allies or partners, and they basically said that they're going to print as many Swiss francs as they have to keep the relationship at about 1.2 to 1 versus the euro. As a result, the Swiss currency is down today about 8%. Against the dollar. Since the euro itself is down, the Swiss franc, let me see, is it 8%? Yeah, it's 8%, 7.5% now. It's rallied, but it's down 8.5% against the euro. Of course, it's down almost 10% against gold. This has got to be the single biggest daily decline in history. I mean, I could be wrong. I didn't research it. Maybe if anybody else wants to look through the numbers. But this is a near 10% depreciation, devaluation, however you want to describe it, in one day of the Swiss franc in terms of gold. And so you have the Swiss now deciding that they are going to effectively adopt the euro in the same way that the Chinese have adopted the RMB, although the Chinese are very slowly learning from their mistakes, and they're allowing the RMB to appreciate, although much more slowly than they should. The Swiss decided that they think the currency peg works so well for the Chinese that they want to adopt the same policy over there in Switzerland. And so now, every time the European Central Bank decides they want to buy some Greek debt or some Italian debt or some Portuguese debt, the Swiss citizens are going to be chipping in to that bailout pot as well, because the Swiss National Bank is going to have to keep printing Swiss banks to buy up European bonds to defend this new peg. And so what does that mean for the Swiss? That means that their currency will be worth less than it otherwise would have been. That means that prices will be higher for Swiss citizens, and ultimately it will undermine the very competitiveness of the Swiss industries that Switzerland thinks that a weak currency is going to support. And really what this is showing is the breakdown of this fiat monetary system that we have, where, one irresponsible country's monetary policy infects another. We infected the Chinese with our inflation. Europe is infecting Switzerland and corrupting Switzerland. The whole world is being corrupted. And, of course, the last safe haven standing, the only real money that no central bank can print, is gold. And as I said, gold is at a new all-time record high today, which also throws cold water on all that bubble talk from a couple of weeks ago when gold went back down to about 1650, which, by the way, if you go back and listen to these shows, I thought 1700, 1650 would be the bottom in the gold correction, and I pretty much called that. But anybody who was saying that gold was a bubble is proven wrong conclusively today. At least, no, maybe not that. Anybody who said that the bubble had popped. So it is still possible that gold is in a bubble. I don't think so. But the people who said that that bubble burst, like Dennis Gartman, are clearly wrong. Because if the bubble had burst, by definition, gold couldn't make a new high. So the fact that gold has made a new high proves that Mark Gartman was once again wrong on his call that the gold bubble had burst. Anyway, stick around. We got a lot more of the Peter Schiff Show coming up. You're listening to the Peter Schiff Show on SchiffRadio.com. Stick around.
The Peter Schiff Show.